Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 15th, 2025, and we're diving into the latest earnings report from Mersana Therapeutics, a clinical-stage biopharmaceutical company focused on developing antibody-drug conjugates for cancer treatment. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Mersana Therapeutics has been making waves with its innovative cancer treatments, and their recent earnings report provides some interesting insights, especially with the acquisition news by One Biopharmaceuticals.
Acquisition announcement. Let's start with the big news. Mersana Therapeutics has announced an acquisition by One Biopharmaceuticals. Can you break down the details of this deal for us, John?
Absolutely. Mersana has entered into a definitive merger agreement with One Biopharmaceuticals. The deal includes an upfront payment of $25 per share in cash, with potential contingent value rights payments of up to $30.25 per share. This brings the total potential deal value to approximately $285 million. The acquisition is expected to close by the end of January 2026, pending customary closing conditions and regulatory approvals.
That's a significant deal. How does this acquisition align with Mersana's strategic goals?
This acquisition provides Mersana with the financial backing and resources to further develop its promising pipeline of antibody-drug conjugates, particularly their lead candidate, MRSN, which targets high unmet medical needs in cancer treatment.
Financial performance overview. Moving on to the financials, Mersana reported a net loss of $7.5 million for the third quarter of 2025, which translates to a loss of $1.51 per share. How does this compare to their performance last year?
Compared to the same period last year, Mersana has reduced its net loss from $11.5 million, or 2.34 per share. This improvement is partly due to a decrease in operating expenses, particularly in research and development and general administrative costs. Their cash position remains strong, with $56.4 million in cash and equivalents, which should support their operations into mid-2026.
And what about their revenue from collaborations?
Collaboration revenue for the quarter was $11.0 million, slightly down from $12.6 million in the previous year. This decrease is mainly due to reduced revenue from their partnerships with Johnson & Johnson and Merck KGaA, although this was partially offset by increased revenue from their agreement with GSK.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.44 for Mersana, but the actual EPS came in at $1.51. What does this tell us about the company's performance this quarter?
The actual EPS of $1.51 was slightly below the forecast $0.04, missing expectations by 0.07 cents. This indicates that while Mersana is making strides in reducing its losses, there are still challenges in meeting analyst expectations. The miss could be attributed to the ongoing investments in their clinical trials and development activities.
How might this impact investor sentiment?
While the EPS miss might cause some concern, the overall reduction in net loss and the strategic acquisition news could offset negative sentiment. Investors will likely focus on the long-term potential of Mersana's pipeline and the benefits of the acquisition.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Mersana has reported a decrease in both R&D and G&A expenses. What does this mean for the company?
The reduction in R&D expenses to $12.2 million and G&A expenses to $6.3 million reflects Mersana's efforts to streamline operations and focus resources on their most promising projects. This cost-cutting approach, combined with their strong cash position, provides a solid foundation for future growth and development.
And looking ahead, what can we expect from Mersana?
Mersana's future looks promising with a strong pipeline, including their lead candidates MRSN and XMT 2056. The acquisition by Day One Biopharmaceuticals is expected to provide additional resources and support for their clinical development programs, potentially accelerating their path to market.